Welcome back to Global Monetary Watch. Today is July 25th, and we're taking a close look at an important topic that continues to shape discussions around the Iraqi dinar. Rather than focusing on rumors or dramatic headlines, today's analysis explores a common misunderstanding that often affects how people interpret developments coming from Iraq. Many observers concentrate only on exchange rate speculation, while overlooking the broader economic picture. Recent updates from the Central Bank of Iraq, government institutions, and the country's financial system suggest that the bigger story lies in long-term structural changes rather than isolated announcements. Understanding those developments provides a more balanced perspective on what is actually happening. One of the biggest misconceptions surrounding the Iraqi dinar is the belief that every significant development must immediately result in a visible change to the official exchange rate. In reality, monetary systems rarely operate that way. Central banks generally spend considerable time preparing financial conditions before making any major policy adjustments. Iraq's financial authorities have continued releasing information that reflects ongoing efforts to strengthen monetary stability, improve banking operations, and reinforce confidence in the country's financial institutions. These gradual steps may appear uneventful on the surface, but they often represent the groundwork required for broader economic objectives. The Central Bank of Iraq remains at the center of nearly every discussion involving the national currency. Its responsibility extends far beyond publishing an exchange rate. The institution oversees monetary policy, supervises commercial banks, manages foreign currency reserves, and works to maintain financial stability throughout the country. Since the adjustment made several years ago to the official exchange rate, the bank has continued supporting that policy while implementing additional measures designed to improve transparency and strengthen the financial system. These actions demonstrate that maintaining stability has remained a primary objective rather than pursuing frequent or unpredictable policy shifts. Many people mistakenly assume that when the official exchange rate appears unchanged, nothing meaningful is taking place behind the scenes. However, stability should not automatically be interpreted as inactivity. Monetary authorities often prioritize creating a predictable financial environment before considering broader reforms. One important area receiving attention has been the difference between Iraq's official exchange rate and the parallel market rate. Authorities have introduced various regulatory and banking measures intended to reduce that gap over time. A narrowing difference between these rates generally reflects stronger market confidence, improved compliance, and greater efficiency within the country's financial system. Closing the distance between official and parallel market exchange rates is not simply a technical achievement. It represents a broader effort to strengthen credibility within Iraq's monetary framework. In many countries, reducing market distortions improves confidence among financial institutions, businesses, and international partners. When exchange rates become more consistent across different markets, central banks gain greater control over monetary conditions while reducing uncertainty. This process typically requires careful planning, regulatory oversight, and cooperation between financial institutions rather than sudden policy decisions. The gradual progress reported by Iraqi authorities reflects this longer-term institutional approach rather than a short-term event. Beyond monetary policy, Iraq has continued advancing a series of economic reforms intended to modernize the country's financial foundation. These initiatives, commonly associated with the government's broader reform agenda, address areas such as public spending, financial management, and economic diversification. For many years, Iraq has relied heavily on oil revenue as the primary source of government income. Policymakers have repeatedly emphasized the importance of expanding other sectors of the economy while improving efficiency across public institutions. Although implementation has progressed at varying speeds, several reforms continue moving forward despite political and administrative challenges. It is equally important to recognize that Iraq still faces significant obstacles on its path toward long-term economic development. Challenges involving infrastructure, public administration, institutional efficiency, and anti-corruption efforts remain subjects of ongoing discussion among both domestic officials and international organizations. At the same time, Acknowledging these difficulties does not erase the measurable progress that has already occurred in several areas of financial reform. Serious analysis requires considering both achievements and remaining challenges together instead of focusing exclusively on either positive or negative developments. As we continue, we'll examine how Iraq's oil revenues, foreign currency reserves, and broader financial policies fit into this evolving economic picture before connecting these factors to the larger international environment surrounding the Iraqi dinar. The relationship between Iraq's economy and the global oil market remains one of the most important factors in understanding the country's financial position. Oil exports continue to provide the majority of government revenue, making fluctuations in energy prices highly significant for national budgeting and fiscal planning. However, the discussion has gradually shifted beyond simply tracking oil prices. Increasing attention is now being given to how Iraq manages the revenue generated from those exports. Effective reserve management, disciplined fiscal planning, and responsible allocation of public resources all contribute to strengthening the country's financial resilience, regardless of short-term movements in commodity markets. One area that deserves careful attention is Iraq's foreign currency reserves, which are managed by the Central Bank of Iraq. Over recent years, official reports have indicated that these reserves have remained at substantial levels compared with previous periods. Strong reserves serve multiple purposes within a national economy. They provide confidence in the country's ability to meet international obligations, support monetary policy, and respond to periods of financial uncertainty. Maintaining healthy reserve levels also gives policymakers greater flexibility when responding to economic developments, allowing decisions to be made from a position of stability rather than urgency. The accumulation of foreign reserves is not simply a number reported in financial statements. It reflects the country's capacity to absorb external shocks while maintaining confidence in its monetary system. When central banks possess significant reserves, they are generally better equipped to manage liquidity, stabilize exchange markets, and support the banking sector when necessary. Iraq's reserve position has therefore become an important indicator monitored by economists, international financial institutions, and market analysts. Rather than focusing solely on exchange rate discussions, many experts consider reserve strength one of the underlying measurements of monetary credibility and institutional preparedness. Government policy also plays a central role in shaping Iraq's economic outlook. Under the current administration, officials have repeatedly emphasized economic modernization, financial stability, and stronger integration with international markets. These objectives extend beyond domestic policy and include improving relationships with global financial institutions, encouraging foreign investment, and strengthening confidence in Iraq's banking sector. Achieving these goals requires consistent regulatory improvements and long-term institutional development rather than isolated announcements. As a result, many recent policy initiatives have concentrated on building stronger financial infrastructure capable of supporting sustainable economic growth over time. Another significant area receiving attention involves Iraq's banking relationships with international correspondent banks. These connections are essential because they facilitate cross-border financial transactions, trade payments, and international business operations. In previous years, several restrictions and compliance concerns affected Iraq's banking sector, creating challenges for financial connectivity. Authorities have since worked alongside international partners to improve regulatory standards, enhance transparency, and strengthen anti-money laundering procedures. These improvements are widely viewed as important steps toward increasing confidence in Iraq's financial system and expanding its participation within the global banking network. International cooperation has become increasingly important in Iraq's financial reform efforts. Institutions such as the United States Treasury and the Federal Reserve Bank of New York have maintained ongoing discussions with Iraqi financial authorities regarding banking compliance, transaction monitoring, and international financial standards. These conversations focus on ensuring that Iraq's banking system operates according to globally recognized practices. Strengthening compliance frameworks not only improves operational efficiency but also supports broader efforts to restore confidence among international financial partners. Such developments may not generate dramatic headlines, yet they often represent meaningful progress and long-term institutional reform. Looking beyond Iraq itself, the global financial environment also influences how analysts evaluate the country's monetary position. International currency markets are affected by a wide range of factors, including central bank decisions, inflation trends, interest rate policies, geopolitical developments, and global trade conditions. Since Iraq operates within an interconnected financial system, these broader economic forces inevitably shape the context in which domestic monetary decisions are made. Understanding Iraq's currency therefore requires examining both internal reforms and the wider international environment rather than viewing either in isolation. As we continue in the next section, we'll examine the common misunderstanding many dinar followers make when interpreting these developments and why separating verified information from speculation remains essential for objective analysis. As we continue today's discussion, it becomes clear that one of the most common misunderstandings surrounding the Iraqi dinar has very little to do with the currency itself. Instead, it relates to how many people interpret every piece of economic news. Some observers view developments as though there are only two possible outcomes: either a dramatic change happens immediately, or every announcement is meaningless. This simplified way of thinking often prevents a deeper understanding of how monetary policy actually works. Financial systems evolve through multiple stages, and meaningful institutional progress usually takes place gradually rather than through a single headline-making event. Viewing Iraq's financial journey as a simple yes or no scenario can easily lead to unrealistic expectations. When every announcement is measured only by whether it changes the exchange rate overnight, many important developments receive little attention. Banking reforms, improvements in financial regulations, reserve accumulation, and international cooperation may not produce immediate market reactions, but they contribute to strengthening the overall financial environment. These gradual improvements often represent the building blocks of a more resilient monetary system. Ignoring those steps simply because they do not create instant results can result in an incomplete understanding of the broader economic picture. A more balanced approach involves examining verified information within its proper context. Reports from the Central Bank of Iraq, official government statements, reserve data, and internationally recognized financial institutions all provide pieces of a much larger puzzle. No single announcement tells the entire story. Instead, each development should be evaluated alongside broader economic indicators, banking reforms, fiscal policy changes, and external market conditions. Looking at these elements together creates a more accurate picture than relying on isolated headlines or unverified speculation circulating across social media and online discussion forums. Another important point is the distinction between factual developments and market rumors. Throughout the history of the Iraqi dinar, numerous unconfirmed claims have circulated regarding exchange rates, policy decisions, and timelines. Many of these stories have later proven inaccurate because they were not supported by official evidence. Responsible analysis requires separating documented information from speculation. This means following official communications, reviewing publicly available economic reports, and understanding that financial policy decisions are typically announced through recognized institutions rather than anonymous online sources. Maintaining this distinction helps create a more informed and objective understanding of current events. When evaluating Iraq's monetary outlook, several reasonable possibilities can be considered based on available information rather than assumptions. One scenario is the continuation of current policies, where the central bank maintains exchange rate stability while gradually advancing banking reforms and strengthening reserve management. Another possibility involves measured policy adjustments if economic conditions support them in the future. A broader long-term scenario would depend on multiple factors working together, including continued institutional reform, political stability, sustainable fiscal management, stronger international banking relationships, and favorable economic conditions. None of these outcomes can be treated as certain, which is why responsible analysis considers multiple possibilities instead of focusing on only one expectation. Economic transformation rarely follows a perfectly straight path. Iraq continues addressing long-standing structural challenges while simultaneously pursuing modernization across its financial sector. Progress may appear uneven at times, especially in a country rebuilding institutions after years of economic and political difficulties. Nevertheless, many ongoing initiatives demonstrate an effort to strengthen governance, improve transparency, and expand financial stability. These developments should be viewed as part of a long-term reform process rather than isolated events. Understanding this broader context helps explain why economists often place greater emphasis on institutional trends than on short-term market speculation. The international environment also remains an essential part of Iraq's financial story. Global interest rates, movements in the US dollar, energy markets, geopolitical developments, and international trade all influence economic conditions beyond Iraq's borders. Because Iraq operates within this interconnected global system, domestic monetary policy cannot be analyzed independently of international events. Changes in worldwide financial conditions may create opportunities or present new challenges, making it important to evaluate Iraqi developments within the broader global economic landscape rather than focusing exclusively on domestic headlines. Taken together, the available evidence suggests that Iraq's financial story is fundamentally one of institution building, economic reform, and efforts to strengthen monetary credibility over time. Discussions surrounding the Iraqi dinar often become dominated by speculation, yet the documented developments receiving the greatest attention from economists generally involve banking modernization, reserve management, regulatory improvements, and government reform initiatives. These are measurable indicators that can be monitored through official reports rather than rumors. Understanding these structural developments provides a clearer framework for interpreting future announcements as they emerge. Ultimately, the most valuable perspective is one grounded in patience, careful observation, and factual information. Financial systems develop through continuous policy decisions, regulatory improvements, and institutional cooperation rather than isolated moments. Whether examining central bank communications, economic reform programs, foreign reserve reports, or international banking developments, each update contributes another piece to the broader picture. Remaining focused on verified information allows observers to better understand Iraq's evolving financial landscape without relying on unrealistic expectations or unsupported claims. That concludes today's analysis from Global Monetary Watch for July 25th. We hope this discussion has provided a clearer understanding of the economic developments currently shaping Iraq's financial system, and why separating verified facts from speculation remains essential when following this topic. We'll continue monitoring official announcements, central bank updates, government policy changes, and broader economic indicators to bring you objective and informative coverage. Thank you for spending your time with us today. Subscribe to Global Monetary Watch and press the bell icon so you never miss our latest analysis and updates.